Let's take a look at some information and charts on Ethereum for BraveNewCoin. Currently a proof of work chain. Hash rate has hit an all-time high along with difficulty. Over the past few days, it's continued to hit successive higher highs since mid-August. There was some price bearishness and China mining exodus that likely played a role in the April, May, June decline in hash rate, but all that has since been wiped away with the highs here. And it makes sense because, like I'll show, mining revenue is still insanely high relative to where it's ever been on ETH. So as long as that remains, even with EIP 1559 in effect, then hash rate will continue to increase. Total nodes on Ethereum, I get different values, which is weird. Ethereum had some issues with the previous version of Geth, I believe. That's been cleared up. Everybody, for the most part, it looks like has upgraded to the more secure version. But I'm getting quoted for 3,600 nodes on ethernodes.org, and then I'm getting quoted for less than 3,000 on Etherscan. A big decline here, likely a singular entity in Fura. I don't know. I don't know if the nodes actually disappeared or if they're just not getting picked up by either website. In any case, not good to see nodes declining, but this may have revealed the total percentage of nodes that are cloud mining or cloud infrastructure. I don't know. Most of which in the United States, Germany, Europe, a few in Asia, a few in Australia. Overall, though, pretty well distributed across the globe. ETH also has 2 miners coming soon, which means they're probably already in use on the network with crazy profitability levels at 4 cents per kilowatt hour. So you got to race against time if you are an ETH miner, because ETH will eventually go to proof of stake, and you hope to return your ROI on these before they do so. Even after they do, you can always switch gears to ETC, which is the only chain that I know of that has the similar algorithm. Now, if ETC switches their algorithm to mess with the ASICs, then you're kind of SOL, but for the most part, I think most of the ETH chain is GPU mined and not ASIC mined, if I had to guess. ETH transaction counts are down significantly from all-time highs, but still basically effectively at an all-time high aside from April, May, June. So that remains relatively bullish. Average transaction values are creeping up again as fees crept way up again. And if we look at the mempool, fees aren't as bad as they were from February to May. Kind of what killed the DeFi rally, the ETH rally, was high fees. So what ETH needs to sustain itself is to keep fees low by going layer 2 scaling it all in any way, shape, or form before proof of stake. We're starting to creep up again on unconfirmed transactions, which is going to have a massive effect on gas prices. I like gasnow.org to look at this. Gas prices over the past few days have held sub 80, which is really my personal sweet spot, where I'm like, yeah, I can do pretty much anything I need to when gas is sub 80. When gas gets above 80, it gets more and more painful. Anything above 150, it's just like, I'll just wait, right? I'll just wait for gas to come down because I'm paying a significant amount in fees. Maybe not to send ETH, like to transfer ETH, not so big of a deal, but to actually use a DEX or, for example, an enzyme to do multiple transactions back to back to back through multiple DEXs, it just gets super, super painful very quickly to actually transact. You can also watch the burn on watchtheburn.com. Currently 53% net reduction. Since this went into effect, they've burned 300,000 ETH since EIP 1559. There have been a few days when issuance has been negative, but in general, issuance is still trending positive as gas is sub 80, sub 150. You know, there's a sweet spot in there somewhere, but if you are a hodler, you could care less about fees, right? You want fees to be maybe as high as humanly possible because then issuance goes way down. But if ETH is a network that's supposed to be used by people, you want fees to be low. You want fees to hold low. You want things to scale. Yes, you want activity, but at some point, if things don't scale and you have the activity, fees get so high where people go elsewhere, right? We saw that with BSC a few months ago. We saw that with bridging most recently. But when fees get high, people will go elsewhere because there's elsewhere to go now. Net emissions, like I said, a few days, this is from the block, did go negative September 3rd, and then a few days after that. But mostly it's still trending slightly positive. And ETH miner revenue is still significantly high relative to where it's ever been historically. So, really I expect hash rate on ETH to just continue to increase until they get kicked off the chain because if fees hold at these levels, it is extremely profitable to continue mining on ETH. And just another way to look at these fees, on average, fees are extremely high. I didn't even realize they hit a new all-time high the other day for averages. NFTs obviously playing a big role there, and block sizes continue to increase, and it hasn't really helped much. So the scaling initiatives just aren't there despite a demand for block size. NVT, inverse metric of economic utility relative to price, basically hit an all-time low. July 23rd, price kept going down, and now NVT is rising. I'm not a big fan of NVT in general. Active addresses have plummeted from the all-time high, but still remain higher than most of the history on Ethereum. So that's still incredibly bullish if active addresses and transactions can curl up from here, but ultimately transaction fees are going to play the biggest role in limiting the upside there. If we look at MVRV versus price, which I prefer over NVT, in general, a 2x multiple for most coins is basically an interim top, local top, all-time high situation. This is a measure of market cap versus on-chain activity directly. So in 2017, MVRV exceeded 2 several times, and it was eventually the top. In May 2021, most recently, MVRV exceeded 2.2, or exceeded 2.15, whatever, 2.2, and that was the top. Currently, MVRV is still 1.8. So if anything, of all the things I'm bullish on, to see this, it tells me there's somewhat limited upside unless on-chain activity increases dramatically, but then the scaling situation discussion comes into play. Can ETH get the fee stuff under control? I don't know. It's a bit of a give and take. Definitely going to have to keep a close eye on this throughout Q4 if things start to rise dramatically in price. And just to hit on DeFi real quick, TVL on ETH is at an all-time high, I believe. I should probably check that before I say that. Yeah, TVL on ETH is at an all-time high, approaching 160 billion. And you're seeing TVL peaks on lots of other chains for various reasons, incentives to go elsewhere. So it's good that ETH has competition. Increasingly, there is pressure to scale on ETH to do something about fees, because if they do not, there will be a chain immediately waiting in the wings to pick up all that activity. Right now, there seems to be a seesaw effect between stuff's too expensive on ETH, let's go elsewhere. Stuff gets cheap on ETH, let's come back, right? That's kind of what we're seeing right now. But ETH needs to maintain that low fee level. ETH on all exchanges, as far as reserves are concerned, continue to push all-time lows. ETH 2.0 staking continues to increase. And with EIP 1559, obviously the supply reduction is massive between all of these initiatives that are going on, let's say. So the fundamentals are strong for highs. And if you're bullish, what you don't want to see is this metric start to curl up over time. Google Trends have basically pulled down from all-time highs significantly, and kind of they still sit, basically where they were at all-time highs previously. But it's good to see this reset a little bit. We saw a lot of hype with NFTs and OpenSea and Top Shot and CryptoPunks, right? It was just this rolling hype train between everything. And it looks like things are turning the corner over the past couple days for ETH and DeFi. So I expect to see this start to pick up again in Q4 when ETH price likely takes off for new all-time highs. Moving on to technicals, this is the 1-year MA multiplier in the green, 5 times that in the red, and white is the midline between the two. Historically, this has been pretty good at backtesting, or on backtesting, even with the most recent all-time high. We just nearly grazed the sell zone there at the red line, the 5x multiple. Currently, that 5x multiple is at 9K. You can see how sometimes we exceed it for multiple days. We tap it, we cruise the midline, right? All sorts of variations here for ETH, but the upside is still significant from here, arguably a 3x from here still. And if we want to use the half-year MA, which has been okay at sort of telling you where the top is. In 2017, we hit the 5x multiple and stayed there for quite a while. Then we tapped the midline. Most recently, we tapped the midline a bunch and never exceeded it. So if we can exceed the midline this go run, if we have a run in Q4, 13K isn't out of the question. It's probably a tall ask for the end of the year, but if we exceed this 9K level, the next zone up would be between 9K and 13K. On the 12-hour 5200, everything's bullish. You know, there's pretty limited technicals for ETH right now because everything just looks baseline good. It doesn't look overbought. It doesn't look oversold. It doesn't look crazy euphoric. We were bullish. We reset that momentum completely and sustained bullishness. And we're just sort of flatlining here for a while, which is completely fine. You could even argue some sort of cup and handle situation, which I'll show on ETH BTC. But if we just measure that out, I had it somewhere. Yeah, if we measure that out, we get basically a level of 6 to 7K, which is approaching our 1 year MA multiple level. So all this stuff usually lines up pretty well. It's all looking at the same data. But if this is a cup and handle, then sure, why not? I like 6,500 by the end of the year. Cloud loves this on the daily. It's already bullish. TK lines are flat, so it's momentumless. But if this thing continues to just creep up over time, the TK lines will creep up with it. And then on the 12-hour cloud, you're seeing a crisscross of the TK lines, potentially telling you to re-long if you jumped out over the next few days with a bullish TK cross. So ETHUSD looks fine, right? It doesn't look crazy phenomenal, but that's okay. If this is the beginning of a bull trend, you want to see momentum zero out. And ETH BTC on the 4-hour is coming out of a multi-day sort of descending triangle consolidation, which refused to break down, absolutely refused. You could argue even equilateral triangle, whatever it is, it's breaking to the top side with a bullish 4-hour Kumo breakout. And on the daily, again, you have this head and shoulders, cup and handle and or inverted head and shoulders quality. It's a mess, whatever it is, but it is above the cloud. It does have bullish everything on the cloud. Anything above 0.8 probably brings us to 0.1 or higher this quarter. The only caveat here is that ETH BTC has never outperformed BTC in Q4, ever, in the history of all data that we have on the pairs, which admittedly isn't a lot of data, but the trend is pretty clear. We aren't positive typically in Q3, Q4, Q1, Q2, beginning of the year is when ETH typically does better than BTC. This could be because some of this Q4 stuff spills over into Q1, at least historically, and ETH tends to top later in the cycle than BTC had been in the past, but that may change as ETH gets bigger and bigger and bigger. Lastly, I'll just mention the ETH BTC fund I trade for Techme Capital on enzyme.finance, along with the DeFi portfolio, where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance allocation, all the trades in the trades tab down below. You can see all of the yield plays I'm making on various coins in various places, all the fun stuff we're holding here. Sushi, big day, Curve, SNX, all having big days. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.